Good morning. Welcome to Trade Live with IG, myself and Scotty Byrne.
Absolutely. Morning, everybody. Happy Tuesday.
The Credit Suisse crew all back together. How are we, everybody? Good morning to you all. Good morning, Carlo, Shrimp Fred, British Indian, Friar Tuck, and Steve Davies. There we have the beautiful morning. Why would I want to come back from Ibiza when you've got beautiful skies like that?
Who needs the White Island when you've got the grey city?
Hey, that's stunning. Stunning. Good stuff. Right, let's have a look at what's coming up on today's show. Well, there's not much variation. I'll tell you what, if you don't like Scotty Byrne, then there's not too much to get stuck into this morning.
If that lineup doesn't double the subscription numbers by lunchtime, then I don't know what does. I mean, that is literally...
We'll need a new target.
Oh, no, absolutely.
Nice bit of copy and pasting going on from Phil and team there. So, well, I'll tell you what, we're going to do our normal fast markets at 8:15, but 8:35, this is the biggest week that I can remember with regards to macro, with regards to earnings, and then, of course, our Fed rate decision. So we're going to go through all of that at 8:35. So 8:15 is going to be single stocks. 8:35, we're going to look at the big important top-down macro factors. All sessions opening bell 9 a.m. and then talking shop with the team from the trading floor.
Great.
The PCMs at 9:10. Talk to me, Scotty.
Well, it's great to have you back. It was very interesting to be with Ange last week. She's absolutely brilliant, but I just feel a bit more comfortable. It's like our old seats. It's just like it's a bit more comfortable. How was your trip? You look well. You look rested.
So, but it was the Thursday that you were in, was it?
Yes, the Thursday. Yeah, that's right.
I think I watched the Thursday. I didn't.
Oh, of course you did.
Friday.
Yes, that's right. You
I actually watched yesterday.
Excellent, excellent.
We had Chris Beecham and Aaron on, and it was great. They did a weather report for the first 5 minutes.
There you go. Listen, you need to vary the output. Yeah. Content is content, no matter what the subject, just as long as keep it going.
But yes, great time. Really good time. Shall we talk about Ibiza now, or shall I save it?
Well, which segment? I guess that should be under fast market, shouldn't it, maybe?
Yes. With some of my dance moves.
Some of your dance moves, that's right, absolutely. I hope you don't broadcast that video you took earlier of us dancing in the studio.
We thought we'd liven it up a little bit. We saw, I saw Calvin Harris live on Friday night.
Yeah, fellow Scotsman.
And I tell you what, when he addresses the crowd as well, I reckon he ups the Scots in him as well.
Do you think?
Yeah.
That's amazing.
Thank you, everybody.
I love it.
So we thought we'd have a bit of a warm-up this morning with some Calvin Harris, didn't we?
Well, did you get any of your super fans? Because remember the last time we were out in the sunshine, you had some of your IG live at IG super fans coming up. Do you remember that? Just
brought back a memory. So we're on the flight over, right? And we get the British Airways from Gatwick. Didn't even know British Airways flew from Gatwick.
No.
But instead of getting on that annoying train to take you to the South Terminal,
or
a different terminal, you stay in that terminal.
Oh,
so it's actually really nice.
Yeah.
And we go on, we get on the flight, sitting down, and we bump into a couple of the funniest girls I've ever met in the airport, and they end up sitting next to me. So it's great flight, right? Seatbelt sign goes off, get up, walk into the back to the bathroom, and he goes, some lad, I guess, like, mid-30s or so, he goes, hey, you're that weatherman.
Really?
I said, sorry?
That's amazing.
He goes, you do the weather on TV. I went, what do you say?
Yeah, well, yeah. I guess you just say yes, right? Because if someone's got it that wrong. So if you remember, though, last summer, when we were speaking to some of your other super fans, that's when you first actually nabbed onto the fact your account had been cloned, didn't it?
Oh, in Broadgate Circle.
Yeah.
That was dangerous.
So keep your eyes peeled, people. There is only one Richie Mac.
Scotty and I sitting having a drink in Broadgate Circle, and an old boy comes up to me and he goes, yeah, you're the guy on TikTok, aren't you? I was like, yeah, that's me. He goes, I'm not sending you my account details. Sorry, what? He goes, you keep on asking, I'm not sending you my account details. Yeah. And it turns out it had been a scammer.
Yeah.
Using my pictures.
Absolutely, yeah.
So,
goodness me, so just be careful out there, everybody.
So that was it. So I did explain to the two lads were on part of a stag party. And I said, well, I do a little bit, but it's not the weather. He goes, I'm sure you're the weatherman. So that was it. So of course the lads and the girls called me the weatherman for the rest of the holiday.
Nothing wrong with that.
Right, let's see how the weather is looking this morning. Our markets got the cloud over them that they had yesterday, or are we on for brighter skies? Let's go into overnight action. Scotty, what happened yesterday? Because I tell you what, there was some great trading opportunities.
Yeah, there really was. I mean, that initial surge actually first in Europe, when you had that first initial surge higher with the DAX on the trade deal.
With the weekend markets as well. Markets were looking up.
Weekend markets as well, and then it just all basically fizzled out. I mean, if we just have a little look at the DAX just on a little 15-minute chart, something like that, just on my...
Oh, Monkey Man's back in the chat. Welcome back, exactly, Monkey Man.
That is, what am I doing there?
That's great news.
Gone wrong there.
We've missed you, sir.
Something's gone wrong.
And R6 in, and away from the numbers.
So
we got a full house.
Sell off on the euro, sell off on the DAX. We did see a piece from an economics company yesterday saying the new trade deal will take 0.5% off European GDP. But I mean, as markets have had such a run, it's probably not a shock you get a pullback. But yeah, I mean, if we take a look at the DAX, say on a little 15-minute chart, there you can see that sell-off from sort of yesterday morning. You had a little bit of early euphoria at 7 a.m, but then a really steady sell-off.
I tell you what, this is, so when that goes back until when?
So this is basically from the peak was Monday morning. It's only a 15-minute chart, so that high peak I'm kind of hovering over there. That was 7 a.m. yesterday.
If we go further back, do you see the jump up when the actual?
Let's go. Yeah, let's try 30 minutes. So yeah, so that was
So this felt like, let's say you think your wife's cheating on you, right? Mm-hmm. Not talking about Mars in particular.
No, of course.
Bit late for that, isn't it?
Yeah, a bit late for that. There we go.
So you know, you've got your suspicions your wife's cheating on you, and somebody goes, "Oh, I've found out whether your wife's cheating on you." Boom, market goes up.
Yeah.
Euphoria. We've got a trade deal. Unbelievable.
Yeah.
And yes, markets do not like uncertainty. But when the certainty is still pretty bad and you're taking 0.5% off GDP per year, then this is the way markets have, the mentality that they're in at the moment is they will buy on any news.
Yeah, I mean, there's just seems to be very much a state of where even some of the commentators that you're seeing on social media are just going, I must have been wrong on tariffs. Now, again, how wrong they are, not, or whatever, is yet to be seen. But if from, as I said to you on the way in this morning, that I've started listening to the episodes of the podcast I'm catching up on, where if you think now the US is about to get into a cutting cycle as well, it's very...
well, we'll go on to that later, whether that is the case or not.
Absolutely, yeah, and we will be touching on that and some of the reasons for and against. But yeah, at the moment... there's just always a couple of stocks every day that are just effectively sort of elevating the market. You got the chip names again, AMD making new highs in the US. That's just propping that up. I mean, breadth is wide, but that's slowed again. But definitely where things like Nike, I know a stock use.
Well, we'll go on to that soon. Let's stick on Europe at the moment because look at this. This was the end of the question of US exceptionalism. Because there was no tackle, was there?
No.
What was there instead of tackle?
Well, as our friends in the FT have coined, wacko, the world always chickens out. Now, again, the caveat is for any sharp-eyed, as we've discovered, this is not a new phrase, but it's not finding its way into kind of accepted parlance until now. I mean, yeah.
This shows how pathetic the European Union is. They cannot get themselves together. And why we suffer in Europe, because the leaders just cannot agree. And so von der Leyen has just had to go out there, sign anything that's put in front of her, and this is the reaction on the back of it. So European leaders are not happy. France in particular, that doesn't really have a budget surplus, a tariff surplus with United States anyway, have called it a disgrace.
Well, it's when you look at how much Europe are pushing on the green energy, and you obviously had the power outages in Spain earlier on this year. They've agreed to buy $600 billion worth of overpriced US energy.
Yeah.
It just sort of makes you think, is the facade really as strong as it looks, and from how Europe has had to roll over?
And Trump's played a blinder. Let's force Europe into increasing their defence, and then 3 months later, but you've also got to buy US defence.
Yeah, because I mean,
he's created a revenue stream and then taken it.
Yeah. No,
absolutely. It's quite so. And talking about Spain there, the Spanish Prime Minister said, "We will support the agreement, but just without any enthusiasm."
That's hardly a resounding success. But I guess this is the issue, isn't it? Whereby a collection of nations operating under an umbrella, it's incredibly difficult to reach
agree on anything.
And apparently, so there's a coach at my trading school, Ross, based up in Scotland. He said he tried to get into Dundee yesterday, and basically there was just police everywhere, cars blocking the road, because that's where Trump was, wasn't he? He was at the golf course. So he said, trying to traverse Scotland yesterday was not a fun experience.
I don't think they would get Air Force One into Dundee Airport. Something tells me.
No, there might be a few cracks in the tarmac there. You might have had to land. You might have had to land elsewhere. As if Dundee hasn't got enough problems. Now they've got the Donald there as well.
So there was a real sell basket going on in the FTSE yesterday, and this was, it wasn't just Europe and Germany that fell out of bed. The German autos got hit pretty hard, but the FTSE intraday, this was your lot. This was one of your lot, Scotty.
Oh, honestly,
just to remind everybody,
never gets old, does it?
Scotty was the original algo trader from 72 years ago.
Exactly. I actually invented the word because I couldn't spell algorithm, so I just had to call it algo.
And so Scotty was responsible for taking huge orders from clients, and which would be called a basket trade.
Yes, that's right. Yeah.
And then sticking it into a spreadsheet, and then at 8 o'clock stick it in the system, go out for lunch, and come back at 4:30.
Perfect. Most sought after job in the city.
But if we just take us through this, so FTSE from that is dead on 8 a.m. It was 9,160,
isn't it? That's a proper cascade lower.
And it really, it took BT down 4%. I think it took Vodafone down 2%. Took the whole mining sector down 2%.
From the open on a Monday, that's a pretty. I can only imagine, because sometimes you do get some of the large Asian funds who trade from the open on a Monday morning, because as far as they're concerned, it's Monday night, so you've already had a day's worth of market action.
Yeah.
So they don't always necessarily think, oh, it's only the start of the week in the UK or whatever. There may be lower liquidity, so there could be a potential for something like that. But I guess with indices at the levels that they are, you're going to get some air pockets now.
Yeah, that's you saw. I mean, it was significant. Iron ore was weak over Sunday night into Monday morning.
Mm-hmm.
But let's have a look at the Rio graph, for example. This was very much, selling across the board.
Oh, wow.
And where are we? Let's just get Monday here. Yeah, there you go. So 46.88. That 2.5% at one stage. So for me, it was a blanket. Right, this is all the money that moved out of the US into Europe and the UK. Somebody's just said, nah. If Trump's won as easily as he's won that, then we've got to have our money in the US again.
I mean, look, I think that sell-off in the DAX yesterday, I mean, that was 1.5%. But again, I mean, for context, it's only back to 24,000. I mean, it feels on these days. And I don't know if you managed to see the copper price move yesterday as well. that's up on my screen. You had a fairly aggressive sell-off in copper price yesterday, where Chile and China said they're going to basically ignore the tariffs there as well.
Oh, right.
So, I mean, he's winning everything, right?
Yeah. So, you know, what it does do is you would think feed into inflation, because he's now, last night, Trump said, okay, well, be ready for a world of 15 to 20% tariffs, which was up from 6 before. So now, you know, especially with copper at 50% as well, you're talking about a 20% global tariff rate.
Yep, absolutely. But I guess the other, I mean, the flip side of that is if the world actually suffers this, you're talking about $600 billion in receipts for the US. So we might not have to go to PayPal to get money for the budget deficits.
Last night they announced that they were going to have to. So we had the Treasury details from the Treasury.
Was that last night? I wondered if that had actually come out yet.
I don't know if it comes out. Yeah, here we go. Treasury refunding financing estimates here. It was meant to be 460 billion.
Right.
Yeah, we'll come for $1 trillion.
Okay.
It was 500 billion more than expected because they'd run into their overdraft too much. So it's absolutely incredible. So
will the world take Klarna? Maybe that's of course they will. Anything. If the Donald says they're going to take it, then they're going to take it.
Right, shall we have a look at the newspapers then, Scotty? Do you want to do FT first? Let's have a look at...
I can't afford an FT sub, Rich, so you're going to have to do the FT.
Well, neither can I. Want to customise your FT trial experience. So I'm on a trial at the moment because producer Phil hasn't sorted out our FT subscription yet.
Boo, boo him.
That's it. Public shame. So... Rachel Reeves and Andrew Bailey have clashed over Revolut. Rachel is trying to fast-track Revolut's banking license through and get it done. But Andrew Bailey cancelled a meeting with the Bank of England because he says, you are not getting involved. The government is not getting involved in whether the bank allows a banking license or not.
Well, it was only a couple of weeks ago. We were talking about Bank of England independence, weren't we? And showing it very strongly there. So hopefully if you've still got your viewers or subscribers from there, they're going to be very happy to show that strength.
So Revolut, right, Scott, should Revolut be... So just remind everybody of who we used to work with.
Yes, Nikolai Storonsky,
thanks.
Who was a derivatives trader, an emerging markets derivatives trader, was sitting near to us with Credit Suisse, at Credit Suisse, and he basically just got sick and tired of the money or the spreads he would have to pay away. Yeah. If he went, into the airport or post office or whatever, and said this is absolutely ludicrous. So he set about to build a foreign exchange platform. He left Credit Suisse. I do remember some of his early investors. There was a bit of a clamour to get involved at the first round of funding. I think it was like 50 grand or something that you had to put in. And there was a guy, Nick Phillip.
Oh, yeah.
Who used to work with us. I'm sure you remember him on X2 Derivatives. He cashed out his 50 grand stake for 6 million quid. And had the onerous decision of having to sail around the Med on his parents' yacht for a year, so not to pay tax on it.
What? For real?
Yeah. I'm not sure how I'd
on
get
his
around
parents' yacht. I mean, that's
I'd have to
start.
Yeah, I'd have to go to Decathlon and get a rubber dinghy and row around the Med for that. But he's made a lot of people very wealthy.
Yeah. Well, one of our team put 5,000 in or 10,000.
Yeah.
And now worth... It's probably into double-figure millions now.
Yeah, I would imagine so. And look, it's one of these things. I mean, again, I think the difficulty is, listen, I love Revolut. I use it for various things. But I was having this discussion with someone a while ago, saying everything's going to go to digital, and I said, okay, fine. And they've got Monzo and Starling and whatever. I said, okay, that's fine. Who's your mortgage with? Oh, Santander. So there's that bridge. I think the final bridge of having your most important, key things.
I've got my business account there.
Yeah, absolutely. As does Marcella. She's got 3 accounts of them, absolutely brilliant. But the problem is when you need to speak to, and this is what, if you ever speak to people who ever speak ill of them, and it's as well, it's in the public space as well, it's documented where the inability to speak to somebody is just what keeps basically high street banks.
True.
And it's just, and look, something like a mortgage, for instance, it's so sticky. In fact, it's a long-term thing. Why shouldn't you keep that separate from everyday, say, sort of, frictionless banking, if you like? So if you're lodging money, if you're paying people, it shouldn't take 5 days. It shouldn't take 3 days.
They took the mick for too long, didn't they?
Yeah, absolutely. Yeah.
I'm just getting my, talking about subscriptions, getting my Times logged into as well, because
I'm logged into the Times if you want.
They're not just Revolut, but also Wise. Wise has had their vote, and they are moving to the US. The co-founders having a bit of an argument there, but seeing as one of them has 55% of the votes, then they have indeed voted to move their primary listing from London to New York. Yet another one, Scotty.
That's right. Had they had the chance to show up at Spitalfields the other week and hear your compelling arguments,
save our stock market.
That's right. Who knows how it would have changed? There's another 2 bits in the Times. Super rich as well. Interestingly, the super rich non-doms are going to the UAE, Abu Dhabi, and Dubai, and they're selling their houses to Emiratis who want a place in London. So
house swap.
Basically a house swap. Yeah. So that means we'll get more of these wretched programs with these ultra high-end estate agents on the show. Again, more things like food costs again there. And then the tax and turbulence pushing 50,000 British companies to the brink. Again, that's getting reflected in the economic data, right?
Mm-hmm. Yeah. So that has us at a grand total of a GBP USD of 133. We have not seen as low as that for a while. 133.33. On cable there. So that is, having come down from 137 that just looked, completely dream world.
It was dream world, wasn't it?
It doesn't hang around for long, does it?
I think, unfortunately, things have just got so expensive in the US anyway. A few percent off your currency here or there sadly doesn't get you much change out of anything.
David Boyce, we just got to stop and let's... So, Scotty.
Yes.
The company that is moving to the US, Boise says, if you ask me, it's not a wise move.
Oh, that is world class. Get him on. That would have, at Credit Suisse, that would have got him Bants of the day, without a doubt.
Or booed off the trading floor.
Or booed off. Your choice, viewers. Your choice. Actually, let's have a poll about that.
Let's have a poll if that's the worst dad joke. Boise's not even a dad yet. Good. Right, we've got... so that's us, the Times, and then we've got one last one. Bain & Company. Good. You know how I love the management consultants. Bain & Company shut South Africa consulting business after a corruption scandal. Now, these were some of my good friends in Johannesburg. So Bain would organise a 5-a-side football match every Saturday morning. And it was such a great way to start your Saturday morning.
Yeah, of course, brilliant, yeah.
You didn't need to be a staff member to go along. You just go along.
You just show up. Yeah, it's a great way to get everyone out on a Saturday morning, as you say.
So, well done, Bain, because, South Africa does not have any kind of reputation for corruption or bribery.
No.
Not like the president was at it the whole time either.
Yeah, absolutely, yeah.
Back in 2012.
Well, it's when you try and send money to South Africa. Though I had to send money to South Africa recently for a holiday for a lodge that we're staying in, and the documentation needed by Lloyd's Bank is just extraordinary.
When are you off to South Africa?
20th of August for 10 days. So yeah.
Safari?
Yeah, absolutely. So as a day in Joburg, I'll see some of our old mates from Joburg there for a day. Then we're jumping in trucks and driving to the Kruger. So yeah.
Oh, fantastic.
Brilliant, yeah. But yeah, we're making payments. Anyway, enough about my holidays. More importantly, the challenge that I'm never going to get.
Did I see yesterday? What was yesterday?
Oh, I didn't have a chance to look. I mean, well, actually, Thursday, it's a shame you weren't here. I know that you logged in. I think you got it online, didn't you? The Hut Group, Thursday.
No, I didn't, but yesterday's one of Honda.
Honda?
And he didn't even show that he took it back to when it did a share split.
Oh, that's low. That's very low. That's very low.
Right, let's see what this is going to look like today.
Let's not hold it against the gallery. Let's just see what they've got for us today.
No, it's just producer Phil.
Oh, okay. Let's get personal then.
Right, are we ready? When we come back, we're going to speak about Barclays and AstraZeneca. But before that, we're going to go to today's chart of the day, which in the country is, US. And what do the numbers say on the right-hand side? Because I did notice you can't see the numbers on the right-hand side.
Is that right?
No, tell us what the numbers are, because people can't see it. 1.405, and it's in the US. Go. Right, let's do a quick run through then. Of course, I assume somebody got it, did they? Nobody got it.
Rich, good look.
Come on, mean stock heaven.
King.
GoPro, that's right. I had one of these back in 2017. Thought it was brilliant. Used it for 3 months and then
You just end up in the cupboard. Yeah, it's a shame. I was actually looking back. I remember everyone was just chasing it. It was like the meme stock about a decade ago. It was a $70 stock.
Whoa. Right, let's get quickly on to what has reported today then, before Scotty's about to ring the bell in 10 seconds. So, run through. We've got AstraZeneca with H1 results of an EPS of 217. That was in line. Go for it, Scotty. Barclays are looking up 2% on good numbers. 3.31 billion versus an estimate of 3.07.
Wow.
So good numbers from Barclays. Entain looking up 3% as BetMGM increases the full year net revenue guidance. Thank you to Andrew McKelvey for that one. Games Workshop, pre-tax profit of 262 and core revenue 565 million. Legal and General cut to neutral at Mediobanca. Price target 278. It's decent upside, actually. And then Unite, the student housing group. Unite had numbers, and they were pre-tax profit 185 versus an estimate of 251. Doesn't sound great there. No, Greg's have had numbers looking down 1%. This is an indication. Let's see. I don't think Greg's ever only moves 1%, does it?
I can't imagine it would.
Their pre-tax profit was 63.5 million. Comp sales up 2.6%. That's not good enough, is it? Not and really. Then WH Smith has sold funkypigeon.com, so it's looking up 2%. Right, there we have it. So, Scotty, run us through some of those moves with Entain, the best one, isn't it?
Yeah, Entain, the best. Wizz Air last week, that had a pretty rough old week last week, so I think that's just a bit of a bounce. Again, it's pretty cyclical names. I think you got numbers out for Royal Caribbean today in the US, and that's intraday, so Carnival up a little bit ahead of that. It's a pretty cyclical. This is not dissimilar to most of the opens that we were looking at last week on Thursday, where it's a pretty cyclical upside move for most of those names.
Barclays up 70 basis points. I don't think that tells the full story of what a magnanimous last 12 months Barclays has had. To come out to have such a strong share price and then numbers still take you 60 bips higher.
Well played, Stephen Dainton.
Well, Stephen Dainton, absolutely.
Another world-class Scotsman.
Yeah, there's not many. Right, Rolls-Royce 987. Not quite, reasonable.
Can't break a tenner, can it?
Nah.
Just can't break a tenner Rolls-Royce until numbers. 31st numbers, aren't they? Rolls-Royce.
Is that right? 31st of this month.
Yes.
Right, let's look at the losers. It's Burberry.
Okay.
National Grid, GD Sports. Something else there. 1111, that's my lucky number as well.
That's right, there you go. Yeah, real estate names a bit. Yeah, it's real estate retail. I guess looking at that retail price data, and there was a bit of that action out overnight as well. Again, that's a bit stronger. So unless they're thinking that they're going to get pressure to start a bit of a price reduction campaign again in the supermarkets for the autumn, but yeah, that's generally it is good news up to a point for supermarkets. But food inflation. Yeah, so it is good news up to a point for supermarkets, but then there becomes a point, as you know, that you start to downgrade where you shop.
Whitbread highlighted again in the Times this morning. Second article on whether you should buy the stock in about 2 weeks. Tempest saying that they should change their name to Premier Inns because they're selling off all the beef eaters anyway. Okay. You're seeing growth in Germany. You're seeing growth in the Middle East, but I don't know. I do like the story.
It's a good, solid company, isn't it? It's just not. I think at the moment it's very easy to get distracted by the go mega growth.
Yeah.
So when you're talking about you're selling your beef eaters, but I'm going to keep me hotels. It's not the stuff to get people excited. However, as you say, that is just a well-run business, isn't it?
Marks and Spencer's 344, nothing done. Glencore, nothing done. Diageo 1945. It's another one. Just a Whitbread, a Diageo is just not Palantir and Nvidia, is it?
Yeah, that's right. It's just not. Yeah, it's not going to get people excited at the moment.
Right, let's see then what is happening in Europe before we check out Greg's, which Trading Days tells us is uncrossing down 10%.
Oh dear.
Oh wow, Philips. Right, we didn't talk about Philips this morning.
Wowza.
They've had numbers, and Philips have said that their hit from tariffs is no longer going to be 250 million. It's only going to be 150.
Okay.
So, really strong.
12%? I mean, maybe.
Numbers good as well.
Yeah.
So 13% move higher. Wow, that is your winner over there. Greg's must be just about to open. Let's have a look so we can enjoy.
We love a bit of Greg's. Let's make a meal of it.
Should have given me ketchup.
That's right, see?
Right. Let's go down to the 1 minute. And where are we going to see them open? Why are they still not open? 8:05 must be about now.
Yeah, it's 5 past. If it moves to 10, then that's a proper imbalance, isn't it?
There we go. 50. Oh my lordy.
Got to redraw your chart.
Yeah. How low can we take the chart?
Help. Where's the mouse wheel? Where's the mouse wheel?
What, this company, honestly. That's been...
Where is it? Help.
There it is. £15.14. Scotty, what do you do if you've got this?
Well, let's have a little look.
I even had this in my eyes at one point. I think I got out of it on the only... it was already down. Like, this is just... What a horrific performance.
Yeah,
last traded
November
here
2020 levels. There we go.
November 2020.
I mean, again, I know when you're in these positions and they're reporting and they're down like this, the last thing you need is someone looking at the chart going, "Well, it's going to form a triple bottom." But again, that's probably the. I mean, unfortunately, it's difficult to say. I mean, they rebranded themselves well, remodeled themselves well right through lockdown. And again, is it just...
I'll tell you what, just rallied 30p.
There you go, see? I think there was something, I saw a map of Newcastle city centre on social media last week, and there's something like about 28 Greg's or something in Newcastle city centre.
The problem is this a proxy for the UK working class?
I don't think it's wrong to say that, without a doubt. I don't think that's...
So is that really worrying then, what we're seeing going on? Or was it, I mean, it was a crazy valuation, right?
Sure.
But it's now halved in 9 months.
Well, I mean, at the risk of drilling down into the esoteric parts of, high street lunchtime food retailing, I haven't compared a Tesco meal deal versus a Greggs meal deal in price.
£3.90 for a Tesco meal deal.
Okay. Versus...
but if you've got a club card, you can get it for £3.40.
Okay.
Didn't expect me to know that, did you?
No, well, absolutely. But I know you do like your research, and seeing as you first cut your teeth under Tony Charette, nothing beats a bit of physical walk-in retail
and
research.
Andrew Kasoulis.
Andrew Kasoulis, yeah, absolutely.
Right, so that's enough of Greg's for now, isn't it?
It's just something funky like Games Workshop. Come on.
Right, Games Workshop. We're moving on to next then. So, up 2%. How the mighty continue. What a difference to be selling games rather than sausage rolls. I mean, you couldn't get two different stories, could you?
That's right. Yeah. Long figurines, short sausage rolls. Although again, that's only pretty recent divergence, right?
I don't know what happened there, but yeah, it looks...
Oh, goodness me.
Did it actually uncross there? Oh, dear.
Someone might have had a shocker there. Someone might have dropped their Ranger figurine from the top of their monitor onto the keyboard, and, or their troll or something, the cave troll figurine. The big ones might have just dropped off the top of the monitor onto the keyboard.
So if you ever see anything like that, people, excuse me, it usually means somebody's gone in at market with size that is perhaps the wrong size.
It's also known as the "I'll get me coat."
Yeah,
trade just for that one.
Did you ever have one?
Did I ever? I had not around the open so much, because obviously on PT particularly you don't generally get at open trades. But yeah, kind of intraday and certainly at the close, yeah, there's a few. You kind of shutting stocks up 50% with no offers and things like that. You know, that's pretty spicy.
My famous one, and excuse if you've heard this before, my famous one was in Spain when I was covering Jenny Suarez. So our head of the Spanish office, off on holiday, send the junior back in. So this 2004, send the junior across to Madrid office. Nacho Lopez taking me out for a couple of dinners.
Yes, that's right.
So anyway, we've had a big night, right, on it must have been the Thursday night or maybe Wednesday, can't remember. But coming the next day and, you know, I'm feeling pretty hungover. And, of course, lunch gets you through, nice bit of paella. And I cannot wait for 4:30 for the market close. So in Spain, if you do a big cross during the day, right, then what you do you've got to inform the exchange that you've done the trade. So you've got a buyer and you've a seller. In the UK, you just fill them both and that's it. It gets reported. But in Spain, the volume has to go through the market. So you just chuck them both into the closing auction with no limit, just at market. So I'm waiting 428, 429, 430, sell 2 million, Telefonica.
Right.
And then there's like half a second and you're like, right, click, click, buy 2 million Telefonica. And the price chart goes boom, boom. And I'm thinking, what? It can't have. It's the closing auction. How's it just dropped like 4.5% and then gone back up? And I'm scratching my head for about 15 seconds thinking that the exchange has forgotten to put the market into auction. Time difference.
Oh,
Spanish auction in Spain is at 5:30, Richard, not at 4:30.
Oh dear. Dear, oh dear. Well,
So I've just fat fingered $20 million of Telefonica. It drops. So I've sold 2 million at market. As it's selling, boom, I come in and I buy them all back. Made 16,000 euros.
there you go. See? Top trader. Once a top trader, always a top trader.
Yeah, but of course, it was like, do we have to phone the exchange and let them know? Yeah, probably best to.
Yeah, just to be clear, that wasn't intentional, yeah. Oh,
right, Andrew McKelvey has bought some Greg's there. So that is, it's just, you know, where the conference call will be interesting if there is one. Let's see if there's a conference call later on. But how's Germany bouncing from yesterday? We are seeing Deutsche Bank's going higher, Lufties are going higher, Mercedes-Benz, well, 0.5%. It's not exactly.
I think that'll be a pretty cautious rebound, to be honest.
Yeah.
After yesterday.
And then on the losing side in Europe, we didn't do that. Stellantis. Oh. What did this get down to? That's not another drop, is it?
Crikey.
Let's get this Stellantis. I thought.
Ooh.
Oh no, they got lower, right? Yeah, I was thinking. So they tried to bounce. They got up to 888, and now 10% lower, just a couple of days. That stock trades, doesn't it? That's volatile. So good, right? That is 8:14. We are going to jump into fast markets. If there's anything you'd like us to have a look at, we are going to have a look at Tesla because there was a beautiful trade opportunity in Tesla yesterday, which I was very happy to take advantage of.
Nicely done.
Do you know what I found yesterday? Doing this show is really getting in the way of my trading. I went out for a beautiful brunch yesterday. Was sitting there, read all the research, thought, oh, look at that Samsung deal with Tesla, looks really interesting. I'll have to find a daily call option.
Yeah.
It's amazing, isn't it?
Yeah, how about this? If you do the show, I'll go to lunch and read research and I'll send you a message saying, right,
tell me the trades.
But yeah.
Let's do that. Good, right, fast markets next. We'll see you in 2. In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100 where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, over-owned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash. Welcome back to Fast Market. So we got a lot to catch up on because I didn't see Intel. What has Piers got us into there? What a mess. So yeah, let's have a look at just a reminder. Piers fancied that there was a chance Intel was going to have a catch up. So the trade I have on is short the 19 puts. Now, that stock is a lot closer to 19 than when I left, Scotty.
Yeah.
But bizarrely, the great thing about vol is because we've got through numbers, vol has dropped so much that I actually haven't lost money on being short that put.
Okay.
I've obviously I've lost money on being long the call.
Yeah.
But has it got the P&L there? Yeah, P&L open. So we've lost, where is it? So lost $50 on being short that put, lost $8.20, but then made $3.40 back. So yeah, not a pretty trade, but
It also shows as well the risks and opportunities around and then through numbers.
yeah, and how much vol can drop afterwards.
Yeah, absolutely.
So we've got that, but Marvell, I will forgive him because Marvell, that's technologies, not games.
Yes.
That one is doing well, and so we've got a similar structure on there. The 80 to the 115 call spread. That one's doing all right because we've moved up from 72 to 76. Now, Scotty Byrne, we got to talk Nike.
Yes, don't we just?
My goodness me, let's just.
I mean, that has been. I mean, that was
properly.
such a great call from you last year for every single reason or for every single driver that made sense out there.
But let's talk about the JP Morgan upgrade.
Yep.
So there's a long-term chart, right? You can see the fall, the disgrace of that last CEO, talking about management consultants. And this was when he left.
Yep.
So he left around 64. And you can see now that, yes, we've taken sort of 3-4 months for Elliott Hill to find his feet, get the strategy in order. And now we're starting to really see the benefits come through. But the last move yesterday, the one that broke them higher on the chart, do we know what JP Morgan have said on them?
Long-term outperformance, if I remember. They've upgraded them long-term outperformer, I think.
The reason being,
to that effect?
because FYI, so it's the World Cup next year. That's going to be a massive positive. As if JP Morgan just found out.
Just figured it out.
That it's the World Cup.
Yeah. Yeah. Okay.
So I don't know. There's
Olympics as well. So I saw a very interesting take on it last week where somebody was highlighting the turnaround in the ad campaign.
Yes, yeah.
So after Scotty Scheffler won the Open up in Northern Ireland the other week, they're starting to go back to individual sportsman excellence with Nike swooshes everywhere and all that kind of stuff, which is getting back to their. You think of their ads over the years gone by, you know, they were just so on point, weren't they?
Yeah, especially stuff like the Super Bowl and things like that.
Yeah.
But got to say, not the best advert that I've seen recently. What would the best advert you've seen recently be, Scotty?
Goodness me. I don't know, actually. I couldn't tell you.
Let's have a look at American Eagle. No, Monkey Man.
Of course.
I'm not talking about having a look at the advert, Monkey Man.
Yeah.
Let's have a look at the share price reaction to the sponsorship or marketing campaign of Sydney Sweeney.
Yeah.
I mean, how did we not get the memo that American Eagle had signed Sydney Sweeney? Because as soon as you see that, that's way bigger than Kardashian.
Yeah. Well, last week, I think we were talking about it on Thursday, because that's when they were initially up. The fact that I sort of knew who Sydney Sweeney was And some of our friends
That doesn't come as a big surprise to me, Scott.
I don't know if that. Yeah, I don't know if about spending too much time at home with a 7-year-old daughter, but yeah. But I mean, look, it just shows the power of celeb, right? I mean, it's just extraordinary.
So let's see. So this is the daily chart. So therefore, that is Monday, Friday, Thursday. So there's the.
It was up 16% on Thursday, and then it initially.
That Friday is the key. That's the really smart people that you're having the confidence to buy them up 6%. Please tell me one of you did it. Please.
Anyone?
Please tell me.
Anyone out there?
Because that, and I've got to admit, I mean, this.
I'll be pretty sure Nancy Pelosi got some.
She's in the next advert.
She's in the next, yeah, sorry, yeah.
Good genes.
Yeah, good genes.
Look, now,
incredible.
This is a jeans company, right? This is, for anybody who's never bought a pair of American Eagle, it's Abercrombie, but not quite as good.
Yeah.
It's a Levi's, but for teenagers.
Yeah, because it's got nice big emblems on it, lots of, stars and stripes, American Eagle emblems, which, as I was actually saying last week, that this is what we're discussing. It's the kind of stuff my daughter and her friends love to buy. Scoop neck sweatshirts, massive American flag on, massive American Eagle flag. They just love that sort of shtick.
So this, in my graduate scheme in 2004, this was my pair trade, because you had to go and do a presentation to the traders.
Yeah, I remember that.
And I went in, I want to buy Abercrombie and sell American Eagle. Be the other way around now.
Yeah, absolutely.
I would put a pair on American Eagle.
Yeah. I'll see if I can order a scoop-necked American Eagle sweatshirt for my next appearance, if invited back, and just say it's myself or Sydney Sweeney in the running, but she just about edged it.
So let's have a look at the options market.
Chart, actually, isn't it?
What could we even do here? Let's see if there's a set. I'd be very happy to sell those 10 puts. You can take in 4% for selling the 10 puts. I mean, that sets you off and running. But I would imagine they will sell a lot of jeans on the back of this. So sometimes the meme stocks and things like that you can get carried away with, and it's a load of rubbish.
I mean, it's very much a factor at the moment, though, isn't it?
Yeah, but this was not a meme stock move. This was a genuine potential game changer in branding. So what we say?
Well, interestingly, on
13s.
If you look on Seeking Alpha, as of yesterday, short interest was 12.2%.
Right. Yeah, I wouldn't want to be short.
So the meme stock crowd are going to love that, right?
There you go. So selling the 10s to buy the 13-16 call spread. In fact, if you move that up to 17, I'd almost do a 1x2. And then you're talking 15 cents that would cost you. 15 cents for $4 of upside for Sydney Sweeney trade.
Listen.
Take my money.
We will take it.
I'll even buy a pair of jeans for you, Scotty.
Yeah, it's a long time, or it feels a long way away from analyst upgrades, isn't it? Sydney Sweeney's going to wear them. Let's buy some options.
I'd say with some of the valuations and stock price moves at the moment, there are more crazy things going on. Yeah,
and that's what we're going to speak about a bit later, isn't it? The overheating nature of some of these places. But yeah, I mean, looking across at peers, Foot Locker's 16% short interest. So in that segment of the forgotten brands, and you got Victoria's Secret as well. Again, short interest there, 13%. So in that kind of once champion brands space, let's just make sure everyone can see it. So look, you can see the short interest there, 13.2%, Foot Locker 16%. So yeah, I'm not saying any of these are going to move, because obviously this is a very stock specific story, but in that forgotten brands kind of area that sort of used to be 90s, noughties brands, then all of a sudden.
Yeah, because they were spun out of something. Who owned Victoria's Secret? It was
private equity or something bought them.
Bought them, yeah, but they were part of. Was it something like Tommy Hilfiger or can't remember? Anyway,
Yeah.
Maturin saying Andrew McKelvey, nice move on Greg's. Yes, it is. Telling us that he was buying at £15.60, £16.10 bid. Look at the recovery there in Greg's.
Ignore a triple bottom at your peril.
There you go. So, sausage rolls are on Andrew this morning.
Yeah, absolutely.
Beautiful trade, that one. Well done.
Look at that. Nice. Fast.
So, yeah, right. We've been through Nike, which just don't, is it run ahead of itself?
I mean, look, on one of these things, it's when you've been watching. I have been watching it since the Vietnam tariffs, one of the first ones to get rolled back.
Oh yeah, of course. Yeah.
So that's been picking up from then. So I do generally watch that every day. It's one of those ones. It looks like it's not going to go up every day. You're watching it, and as soon as you turn away, it seems to pop. So I don't know. There's no pattern to it.
Yeah.
Which says to me that's not kind of insto money going right. This is a turnaround story. Let's start getting in. This is just more the speculative stuff. But it's I mean, it's certainly in the way up. If you were just looking at the chart, you'd say it's one to watch, but I think you want to see a bit more evidence of something rather than just it's the football Olympics next year, isn't it?
It was literally it's the World Cup, but it is in North America, so they've got a point. It's just that I don't think it should be a surprise to anyone.
I mean, Nike brand awareness in North America, it's a bit of a stretch, isn't it?
Yeah. You're not going to get that any better, though.
No, absolutely.
Right, Tesla. So.
Oh yes.
This Samsung story yesterday.
Yeah. So let me just get the story up on my screen, then you can run through your...
It does it automatically now, guys.
There we go.
Yeah, great move yesterday from the open.
Yeah.
Right, so this story about Samsung, which Scotty will take you through in a minute, came out. Stock was trading $321, and then in Nick Feingold's group, Will Nutting, who's also been on there of Nut Stuff, put into our group a tweet from Chamath.
Okay.
Remember Chamath? That was the SPAC.
Oh wow. Okay.
Yeah.
Yeah.
So Chamath saying Elon is back to sleeping in the factory. He is back on this company 100%, and he's just done a deal with Samsung, which is game changer for Tesla. This takes you from Tesla as a,
as a car company, pure car company, and this is what we've been arguing, right? I mean, last week it just felt as if him coming out saying the transition will be bad, car revenues are down. This just where, I mean, that sell-off was pretty. And as again, we flagged a couple of times last week and recently, it just bounces off that year-to-date VWAP. So clearly the people who get the story, which has been explained on this show as well, thanks to Piers too, right? And then the change
that was Nick Feingold, yeah.
Oh, was that? Sorry, that was Nick, wasn't it? I remember, not Piers. Yeah. So now he's starting to get the contracts, and this was actually originally announced on social media on Sunday from Samsung, but they didn't name the counterparty. Hence the reason it was 8:30 p.m. Eastern time on Sunday on CNBC. But then Musk came out on X yesterday, and he confirmed they were the counterparty who had signed with Samsung. I mean, again, $16.5 billion in the context of the numbers we're seeing isn't necessarily.
Well, I think that's decent.
It's not tiny, but it's a 7-year deal.
Okay,
I mean, if you look at the context of some of the numbers we're seeing about just semis and chips, anyway. But the fact to get this deal on the board, having left the White House, he's obviously maybe looked at politics for 10 days and thought, actually, on second thoughts, I don't want to have a party. And and look,
exactly.
If he's back at where he can add the value, which is his company, then this is a great start. You see the reaction, right? You can't just see the reaction. So there's lots of people which still look at his negative press from when he was in the White House and all that stuff surrounding the negativity there. But again, once people understand the transition of this company and where it's going to.
then you start to build in the potential. You know, if you go down the Adam Jonas route, and Adam Jonas saying that the dream that it's data, robotics,
Yes.
autos, AI,
Yeah.
manufacturing and space, then you start to talk about a very different sum of the parts and a lot of upside.
Yeah, I completely agree.
But this certainly, gives more evidence towards how close it is.
Yes, that's right. And once he applies himself again, he can actually sign on the bottom line. You get deals done, as the old phrase goes, because you got the top guy back and focused on what makes the company good.
Yeah. Good. Right, that takes us to, it's time for macro. We're going to look at the macro and what's coming up this week in about 2.5 minutes' time. Join us. Any views that you have, then, please pop them into the chat there. And only if you've subscribed.
Absolutely. You've had so much this morning. You've had the dad jokes, you've had the Greg's bounce, Andrew trading great. If that's not worth a sub, then nothing is. So get clicking.
From the Weatherman and Sydney Sweeney.
That's right.
Join us.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, wasn't always about power. It was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK, and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset, with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Welcome back, everybody. Now, what, as Rich said at the top of the show, what a week we've got. What a week we've got. Huge earnings later this week, big data, as we can see in the eco calendar. When that gets brought up, there we go. Yeah, we've got JOLTS today. That's been a pretty narrow range around that number. We haven't seen a ton of market reaction off that. Fed decision tomorrow with the press conference as well. So I think, Rich was always the knowledge expert on Fed language at CS, so I'll let him know your thoughts on the nuances there. Then you've got the core PCE Thursday, non-farms Friday, and the unemployment rate, and then with some big earnings as well.
Such a huge feud. I do not remember it ever, ever having it that busy.
I don't actually know how I'm going to be able to sleep. It's so exciting. But we also got Microsoft. Well, so interestingly, with the Fed presser, then we got Microsoft and Meta after the close on Wednesday, and then Apple and Amazon Thursday as well. So if you wanted to be having a prime week to see out the month, then this is it.
Normally, the non-farm payrolls is always on the first Friday of the month, unless that first Friday is the first day of the month.
Right.
And then occasionally they put it on the 7th. But no, they're going for it this week. They're going for a Fed rate decision, a core PCE, and payrolls within 3 days of each other, technically 4 to 8 hours of each other. And so you're going to have rates, you're going to have inflation, and you're going to have unemployment.
Yeah.
It's huge, but shall we have a look at the best moment of last week? This was wonderful.
Look at that.
Look at his face. So, 3.1 billion? What are you talking about? 3.1 billion?
Yeah, especially as well. You see the caption at the top, where he says, "And look, Trump's hair hasn't changed. Look at that. All the years I used to ride a motorbike, my hair used to get really messed up. But look at him. He's taken that hard hat off. Not a move. And to be fair to Powell, so they must use a nice bit of Harmony hairspray. So maybe L'Oreal might move on the back of that.
Yeah.
On the back of that. But yeah, it's when you saw the live caption and he was complaining about some other building as well, and Powell goes, "No, that got finished like 3 years ago." So,
5 years ago.
5 years ago.
Yeah.
Yeah. But perhaps it's a sign of a more constructive relationship between the two. Who knows?
It was literally.
Don't you dare, but I don't want to hear any booze in the background on that.
This is it. That's the best picture. For anybody who makes memes, that really is.
Yeah. That's brilliant.
So, what do you think? Will our poll of the day, will Trump have managed to talk Powell into, or anyone else? Let's remember, it is a committee. It's not Powell's decision. Will others have been strong-armed as well to cut rates?
Well, after a couple of them broke ranks in the last few weeks, particularly Bostic. Raphael Bostic's pretty steady hawk, isn't he? And then the fact they've started moving, I think I can see. So I don't like to use betting sites, but if you use the Polymarket website, there's basically odds for everything there.
Right.
So this is the Fed decision in July, and there's also another bet. What will Powell say during the press conference? 98% of people are betting he'll say good afternoon.
The first you can bet, and I've seen somebody put some like $20,000 on that he says good afternoon.
Look,
just check the September one there, Scotty.
Sure, absolutely. I think SEP's way more.
There we go. So 25 bip cut in September is 54%. No change, 41%. 50 bip cut, 6%. So there we go. So we are, let's say 50-50 for a cut.
I guess I can certainly. There was a definite language change the last time he spoke, right? Because you can't. There's being firm around your mandate and the data, because it's your job as the Fed chair to be like that. But also, when the facts change, you have to respond to how those things are changing. Whether he'll come out and say anything, he definitely mentioned, less impact from the tariffs. and that's becoming a bit more of a narrative as well
Yeah.
for now. But again, he realises, he's still widely criticised for focusing on jobs and COVID and not inflation. So he's going to want to see literally every green light shining green, everything completely clear for the way forward.
So there's one argument there that Vatch and I were speaking over the weekend. Good friend and colleague that used to work with both Scotty and I. And his view is, you have no idea yet how deflationary AI will be. If we thought Amazon was deflationary throughout the noughties, AI is a whole different level. Because you can cut 10% of your workforce like that. You no longer need to employ marketing agencies. You don't need to employ lawyers. The amount of expense that you can cut out by just having a proper AI interface is incredible. And that's inflation done. That's gone.
No, I also agree, but then does that mean the unemployment rate is...
That's the problem.
It's double figures.
So therefore, it's a dual hit, and we will go back to 1% interest rates.
Yeah.
Because you've got zero inflation, you're actually more concerned about deflation, and you've got 6% unemployment. So
I did read a couple of things about this. There's still, now you're getting this starting to come through, and the use of AI agents. So you have a load of these all sort of running away like a load of little minions in the background.
Yeah.
But yeah, this whole sort of argument around universal basic income and how it makes you more productive. And the latest study I saw was it just makes people lazy. So all this stuff about, I'm going to go to the gym and, learn some new skills. It's just like, oh, I've got $1,500 in my pocket. I'm just going to sit and watch YouTube and, or
American Eagle adverts.
Yeah, exactly. I watch American Eagle adverts. But
and okay, so that's the Fed. Press conference, do you think he says data dependent in the press conference, or does he put in a little something for the doves to indicate September is a live meeting?
I think there's probably that latter. I just think something for the doves. However you can change that. I mean, he must have 15 people with a thesaurus going, right, how can we drop data dependency, and how can we say, I think there'll be something in there for the doves. But again, with markets where they are, I mean, I can't remember, it's probably since March, the last time the Fed meeting and presser had a negative market reaction. So I find it really difficult to see how there's a negative reaction out of this, but I can see how it can be underwhelming. But again, the betting for a cut is obviously still incredibly low, but just that, I think he'll probably do enough just to keep the stand on the tightrope, and just to give enough to the I think enough for the bond market. I mean, if you look at the bond market in these moves,
well, that's literally
in this
what we're just getting up there. So
look at that. What a segue! What a segue!
497 on the
know what we're doing.
30-year. We're still there. We are still there. 442. Not too much movement there. You can see the market is very much pricing in September cut.
Yes.
And then another one in December by the looks of it.
Yeah. Well, at the risk of shamelessly plugging, as I said to you, I was walking to the studio today, listening to the first episode of the podcast, which if anyone's not listening, they should.
Shame away.
But it's a great summary from your experts on there, your bond expert. And I'm sorry, I can't forget the gentleman. I can't remember the gentleman's name.
CJ. Yeah.
CJ, yeah. Well, he's basically saying the bond market is allowing all this noise and the political to and froing to happen, which is, I think it's quite indicative of the underlying strength of the economy. Probably the bond market is potentially a bit surprised as well, how resilient the economy is at the moment. So yeah, it's kind of letting the kids play in the sandpit on social media and headlines and so on. So I think that's probably encouraging about what their expectations are.
Right, so that's us. With the Federal will be out of the way on Wednesday night. Normally, presser gets done by about 8:15. And we've only got to wait 45 minutes, and we've got Meta and Microsoft coming out.
You say 8:15, and then you get the really silly questions, and even he starts to get annoyed, doesn't he?
Yeah.
So you can.
So whatever the Fed does, people are going to be looking instantly to the heavyweights.
Yeah. So
Meta, I haven't looked at for a while, to be honest. Let's see how that's been doing. $720. Let's have a look at the daily chart. It's just not one I trade, you know. Oh, there it is, right at the highs. Whew.
Yeah, it's quite so. Just having a quick look at analysis. Rev's going to be a bit better. You can show my screen, guys. So there's Meta last quarter versus next quarter. So yeah, EPS is going to be lower, as is versus the higher revs. But again, EPS revisions have been coming up. It's at the highs. People are looking more for, right, what are you going to do next? What's your CapEx going to be for the next leg of growth? What are you actually looking to push forward here, and what's on your agenda? That seems to be very much the narrative in the earnings. And the ones that we've had at the Mag 7 haven't really blown the doors off. There's been generally a bit of disappointment. Higher CapEx, you know, for what outcome?
Yeah,
and then we can have a little look at let's have a little look at Microsoft as well.
Yeah, Microsoft on the chart. I mean, my goodness, what? It's incredible.
Yeah,
absolutely incredible. So you know that. Which, if you're going to choose one, which one would you rather be in?
I would probably rather Microsoft, just because of the adoption of the integrated AI, which is, you know, relatively kind of funky for Microsoft. Really, they've been a pretty dull company for quite a long time.
Yeah.
So yeah, I mean, some of the Copilot stuff is quite irritating at times. But you know,
even with that move, you'd still rather be in them than Meta, if I forced you.
If you force me, yes. Only because the fact, I mean, when you're looking at as you say, labour savings using AI and so on. If you use Copilot in Excel, it's actually really good. I was using it last week for analysing some stuff.
You don't know how to use Excel, Scotty.
No, I'm completely making it up. I don't even know what it is. I've just heard people talk about it. But yeah, I was running some stuff last week, and the Copilot is pretty good. I mean, it's like an enhanced version of the help function, but however, it's pretty glitch free and will do a lot of stuff for you. So yeah, if I had to, as regards adoption of as I say, of more of the AI functionality, just helping the everyday. I think it's hard sitting here like this and thinking, okay, how is Microsoft helping me? Mm-hmm. But it's when if you're sitting in an office and then suddenly you're doing a task which used to take you 3 hours, now it's taking you 15 minutes.
It's back to the point on inflationary and productivity.
Yeah.
Right. But that is a very good point, Andrew McKelvey. AI will push up energy costs with higher demand, which will be inflationary as an offset. I'll go back at you there and say that AI will allow some new incredible movements in energy production that will therefore increase the supply or the productivity and efficiency, and then that in turn neutralizes, and we move towards uranium.
I think for David as well, I mean, I think it's one of these things, I don't like to short things that are going up. So I just think for David there on the last question, I mean, AMD is just, the more every week I'm seeing more people just looking at it as the kind of rival to Nvidia. So I think of the two. There we go, AMD. Yeah, I mean, that to me is not a chart you want to be shorting. I mean,
well, it depends. I mean, I don't know what the valuation is or the.
Yeah, no. Look, only on pure price action. I mean, if you're running against the peer valuation, if you're running against whatever metrics you want, but this is where it's very difficult for us as sort of how we were taught as fundamental guys, just to go, this is nuts. But again, this is just one of those ones that looks like a pretty dangerous one to think about shorting today or tomorrow. In a week's time, could be different.
Okay, so we've got Meta, Microsoft. That's going to be Wednesday evening, and then we wake up on Thursday, and we've got to wait till 1:30 to get the PCE. So what is the PCE? going to have in store for us. Let's fast forward to 1:30 on Thursday. Here we go. The expectations are for inflation. Core PC price index 2.7. The headline 2.5, up from 2.3. And then the month-on-month of a 0.3% core. So inflation is going back up.
Well, as we said, 6 weeks ago, we had that inflation for the common man index, right?
Yeah.
Food prices are not going down. Fuel prices are not going down. Oil's just, stuck where it is. And even if the Fed were to cut the next couple of months, that's not to say mortgage rates are going to go down, because the Fed can't control the mortgage market. So as regards the money you're spending that is in your pocket on a daily basis, things are not getting cheaper.
I tell you the way to get round it, Scotty. And here's your Ibiza story.
Oh, goodness me, here we go.
So
I need to write this down.
The friends and I, we 2019, we went and we stayed in Ushuaia Hotel.
Ooh.
Now, Ushuaia it's got two hotels, but the main one is, kind of rooms all around the outside. And then in the middle, there's a swimming pool and a dance floor.
I've seen pictures of this, yeah.
And then the huge DJ stage at the front, right? So basically, the whole hotel is set up for a party. And then all the rooms around the outside, 4 floors of them.
Amazing.
So if you're in a garden, if you've got a ground floor apartment with the garden, then your garden becomes the party.
Wow.
And you've got it there. And they let you bring in drinks from the outside.
Oh, wow. So you can set up a little, like a bar almost in
set up your own bar.
Yeah.
And not pay €25 a drink for the drinks in the hotel. Right? And they let you do this. It's incredible. So we did it in 2019, and the room costs €2,500 for the night.
Wow.
But we split it between 4 of us.
Yes.
And it's incredible. It's Calvin Harris or David Guetta or whatever.
Of course, yeah, of course.
7,000 this year. In 6 years, the cost of the room has almost trebled.
Crikey, it looks like I can get myself a paper round if I ever want to go there.
Well, there was no chance we were going to do that. So we decided to get to the rooms at the back of the hotel, so you can't even see the stage. But they were, about, 20% of the price. So we go to check in. And she said, right, look, you if you want to upgrade your room, we'll give you the chance to upgrade your room. So Vach and I looked at each other. Go on then, how much is the room? He goes, it'll be €1,000 to upgrade to a room, not with a garden, but that looks onto the stage.
It's probably a bit safer.
We looked at each other.
People blundering into your room.
€1,000, because again, it's divided by 4.
Yeah.
So we said no. That's how responsible and old we're getting.
See, that's very sensible indeed.
We said no.
What I would have done. I would have said no before I even got there, but yeah.
So,
and one quick response for Paul, sorry, very quickly. I will need a lot of water for cooling data centers. How
Scotty,
can
my story's not finished yet.
Oh, I thought we'd done.
No.
Oh, that's what I did to my wife. I'm so sorry. So come on.
So we say, no, thank you very much. And there's a queue behind us now of like 4 people waiting to check in. And she goes, oh, no problem. Oh, yeah. Okay, well, yeah, I've seen you guys have been here before. I'll tell you what, we've got one of the garden ones, and I'll just upgrade you for free anyway.
No
Upgraded
way.
to one of the garden ones.
See, when you're a name, you're a name.
So if there's, there's ways around inflation.
Yeah, that's right.
Yeah.
Yeah, being known.
And so that was it.
I think at the scene in The Hangover, and it says, if Caesar really stayed here. So before we go on to the next segment for Paul there, just a quick look. I've cheated a little bit, so asking if I can trade water supply via an ETF. You've got the PHO, which is the Invesco Water Resources ETF, which focuses on US water industry companies, etc., etc. So there's a few options there if you want to trade water. I'm sure they're pretty liquid.
Right, we'll go quickly straight away without a break into all sessions open.
There we go. Is this a bell as well?
Yeah, it is.
Bell, yeah.
Scotty, you ring that bell. Go on. My goodness. You've been waiting to do that for all your life.
The reason I get up in the morning.
Right, AMD, there you go. So Scotty's saying, don't be short of that thing. It is up 85 basis points, so certainly he's right just now. NVIDIA, oh my goodness, NVIDIA 179. That's starting to hurt me, actually, because I am short the 177 calls there. So now they are in the money against me. And where else? Tesla up 25 basis points. Then on the downside, what we got, Scotty?
Have a look at the negatives. Uber, that's kind of lost a bit of its impetus. Uber had a nice little run a while ago, and that's just
up
really
to 95, wasn't it?
Yeah, it's just really faded. No one's really looking at Wells Fargo.
Numbers on the what are they? 10th of August, I think Uber numbers are.
Okay.
Around
I
there.
think P&G numbers are this morning. So
In
that's
fact, Uber numbers are on the same day as Disney.
Oh, there we go.
So you get them both pre-market the same day.
Perfect. Okay. Yeah, all that stuff's pretty slow moving, isn't it?
Let me give you the...
Yeah, Nasdaq, that's like another all-time high for Nasdaq. Certainly looking at futures, that's going to be another all-time high.
There you go. So Airbnb also up 1%. Broadcom, all the usual names up there. Nike. Did you know there's a World Cup in America next year?
Is there really?
Likes of Nike, yeah.
And what sport is that?
That is women's football. Come on, England.
Come on, the Lionesses. Yeah, that was fantastic, wasn't it?
You will not get me shouting for many England teams.
Yeah.
But the women's football team, brilliant.
Oh, they're just joyous, aren't they? They're absolutely joyous. And sponsored by Marks & Spencer. So if you go to Marks & Spencer's, pictures of the Lionesses everywhere.
Oh, brilliant.
Eating all their high protein range, big sponsorship, big push there. So, yeah, that's really getting behind.
Oh, forget American Eagle. We've got the Lionesses.
Exactly, yeah. We've got 11 Lionesses, so I suppose more now, isn't there? There's more than 11 in a side now, but yeah.
But Chloe Kelly, what an absolute superstar.
Well, yeah, I mean, so the thing that's key with management anywhere, you don't listen to anyone else, but you do what you know is right. You know the squad, and that's why all the best managers of any business are the same. She just said it's easy to shove Chloe Kelly on because she always scores, she always gets involved.
Yeah.
There at the end, but she waits and waits and waits, puts her on, max impact, fresh legs for extra time, and then what a way to do a little kind of horsey step into taking the penalty. I mean, that's proper showboating, isn't it?
Not so sure about that. I used to do that at the start of my triple jump. I'm not sure about doing it for a penalty run-up.
Yeah.
Right, in the second tier, some of these are actually going to have to be moved into my top tier, I think, because MicroStrategy 407, Snap. Haven't looked at Snap for a while, actually. I thought it was a bit higher than that.
Yeah, I did actually. Remember, after it floated, he got crucified all those years, didn't he?
Have a look at Snap. What's been happening there?
See what they look like.
Right, let's... Oh, yeah, Jeez.
Yeah.
What a...
That is wild, isn't it? That is absolutely wild.
You know, considering everything else, everything else on all-time highs and such like, then Snap has been rubbish. But where is Palantir? Palantir up 20 basis points. Has that one lost?
That's struggling. Let's just have a little look.
Was at 161 yesterday.
Yeah, let's just
have
a little look.
I am now, I'm short calls, I'm short stock, and in fact, I think I'm short calls in two places. Let's see what my my Palantir position is on here, because I know I'm short on Tasty as well. Yeah, there we go. The Palantir 185 calls for August. I'm short 3 of those at 273, now trading 249. So that's $2.73.
Yeah, that's just stalling a little, isn't it? That could have one of those little spells where it just has a little bit of weakness.
Right. Now, what I haven't looked at for a few days is our old Smarter Web company. What's this been doing? So, oh, it's cool. It's come right off, isn't it? Interesting. So, Smarter Web dropping from £4 in mid-July right down, and oh my goodness, it traded as low as
just jipped just under £2, didn't it? Yeah.
Wow. And then yesterday, right? Where is he with Bitcoin purchases and stuff? Subscription tranche update. Is this the ATM? Yeah, this is the ATM facility. So, update is that he's raised 20 million from selling 6 million shares at $3.25 a share. Nicely done. And over a 3-week period. So, also expected once the current tranche is complete, then a new subscription agreement will be signed. Right, okay, so ATM is ongoing. Right, so where does that leave them with the number of Bitcoin? Bitcoin purchases are now 1,825.
Sure.
So, therefore, he's got 146 million of Bitcoin and 20 million of cash from the proceeds. So 166 million. So what's the market cap? Market cap at £2.30. How many shares are there now? 265 times £2.35, 622 million. So the market cap is 622 million.
Okay.
And he's got 167 million of net assets. 3.7 times.
Certainly at the £2 level, just if you look at the pure price action, round about here, that's starting to just shape into, if I was looking at it, that's making the kind of a pattern where you'd be saying that it's worth another look, because that's a really strong structure there that it's started to break out of earlier on. So you saw back in sort of June, late June, you hit the £2 level, found a base, rocketed again. I think that's quite interesting. That.
And the MNAV is as low as interest. Right. Okay. I'll have to have a Boise. Yeah, Boise already doing the maths for me. Boise. Sorry, didn't see that. So 3.7 times, but then he hasn't raised cash for a while.
Okay.
Because he did 17 million or something like that. So the whole model was raise 30 million, raise 40 million.
Okay.
So you would have hoped the next one would be 50 and the next one was 17. That's why it came off. So
right. Okay. That explains a lot.
He's done 17 million, but then he's doing this ATM.
Yeah.
So yeah, I can understand why the MNAVs come off. But if he suddenly came out this week and raised 30 million.
I mean, surely in that raising, there's got to be a bit of a natural seasonality factor as well.
What, do you reckon he's just been on holiday?
Maybe it's just been, maybe
he's been off for a couple of weeks.
He's been off and now he's
back,
the
stock down 30%.
That's right, now he's back.
Right, let us know what you are watching then. Indeed, well done, the Lionesses, and let us know what you are keeping an eye on, because we're keeping an eye on the Federal Reserve this week, and the poll that we asked you, has Trump managed to strong-arm Powell or the others? Because you imagine the communication bribery that's going on behind the back.
Well, now we're getting to the stage where they want to put themselves forward for nomination.
Exactly.
It's almost Shakespearean in its Machiavellian nature. But yeah, look, it's. Do
you want a place as vice chairman in May of next year?
Yeah, absolutely. Yeah, absolutely. Nice little spell in Washington. See the Donald now again with his hard hat on.
So the answer is no. Powell will stand his ground. Only 65% of you think that no rate cut coming, and that Powell will stand his ground. Yes, we'll see a rate cut of 24%. It's a lot more than the odds.
Yeah.
If you genuinely think that, then go to Polymarket.
Absolutely.
Where you can buy that at 3% chance.
Yeah, absolutely.
Good. Right, it is now 9:10 a.m.
Already?
Scotty, we've done an hour and 40 minutes.
Oh my goodness me! No wonder I feel like I need to lie down.
What are you doing the rest of the day?
I'm going to go up and see someone up at St Catherine's Dock a little bit later on today, and then just the regular day stuff and the trading this afternoon and for the US. So yeah,
we've got our town hall here after IG.
Everyone loves a town hall, don't they?
Big numbers last week.
Yeah.
So Funky Gibbon says, how do I pronounce that?
Ceres Powell. I think it's not our trader in Istanbul.
Yes,
it's not. It's
Cheren
Power. Yeah. So I think it's Ceres because
is this
Greek?
Is this a UK?
Yeah, it is LSE. Yeah. Oh wow. There we go.
Tricky few years, and then suddenly.
Look at that.
Right, Funky Gibbon, let me know what's been going on there, because that does look good. 45% rally in a week.
That's a proper gap close. The market does love a gap close there from February. Market loves a gap close.
Well, there we go. That's what I'll be doing the rest of the day then. Having a bit of a read up.
Quite right.
And thank you so much for joining us today. We have the guys, Luke Moore and Ronnie, coming up after the break, and JJ, Jerome Johnson, joining them.
Perfect.
For our in-house podcast, which is Talking Shop.
Awesome. Look forward to that.
But and they are talking about AI actually, what we're just saying about deflation, and
definitely tune into that.
However, if you also want to catch up on our podcasts, episode 3 is now out. There he is, the wonderful CJ Fellingham. We've got a guide to bonds. If you don't really know much about bonds, you don't know much investing about them, this guy right there has been doing it for 40 years for none other than George Soros, amongst others. So, and then
you have to understand bonds.
You
have to understand bonds.
You got to understand bonds because, it goes into everything from valuation of equities to your own mortgage rate. So that is a really nice little 38 minutes there to teach you all about bonds. Good.
Cheers, guys.
Good job today, Scotty.
Thanks, bud.
You've been decidedly average. Well done.
Oh, that's generally better than normal, so.
We'll see you tomorrow. Thanks for tuning in. Good luck.
Cheers.
Google is democratizing knowledge. AI is democratizing capability. And I think this is what this is all about.
And it's this democratization of this information that you just haven't had access to before.
We're not looking to LLM for the right answer. You're looking to challenge and move your thinking and help you think through things, blind spots that you might not otherwise have considered.
Right, welcome back everybody to another episode of Talking Shop. We've had a few weeks off. That's probably our bad. I think holidays, the cricket season's been busy. We've done a lot of events, and so we've just been a little bit all over the place. But we're back, and it's myself, Luke Moore, and it's another episode of the kind of moron show, because it's me, Ronnie's back.
Hold on a second.
Oh, it's my turn to say hello. Yes. The other part of the moron duo, we're back. We've nerded ourselves down into the AI trading tool, but we got a special guest today.
Yeah, we do. And this man needs no introduction from anyone that's kind of worked within IG for years. But we're joined by Mr. Jerome Johnson. Jerome's been with us for many, many years. And as a kind of, well, what do you do in IG? Why are you in this conference? Why are you? Yeah, sorry.
Thank you very much.
Better to come from the man himself, I think.
I mean, first things first, thank you for having me. Second things second, I didn't know I was joining the moron show. Otherwise, I may have given this pause for thought. I work in sales enablement. I'm very much support our premium client function in an enablement role, right? So it's just supporting you with your tools and making sure you're able to deliver value to our most valuable asset, clients, right? And as part of that, over the past year or so, AI has become a predominant feature of that role. Huge focus, a bit of a callback to your last show. You both said you were nerds for AI. I am indeed a big, huge nerd for AI and spend a lot more time than my significant other would like looking at, researching, using AI, both personally and also in work as well.
You're the king of AI, that's what you're saying.
Yeah, pretty much.
You're the king of AI. I think you've probably done yourself a disservice. The whole reason why me and Ronnie have been able to talk about AI is because you've been driving it for us. And over the last couple of years or so, as we've got better and we've got kind of more au fait with these tools, it's been you behind the scenes that have been helping us to write prompts, to get used to how these tools work. And that's really why we wanted to have you on the show. So we had some fantastic feedback to the last episode. So just to kind of run it back, we introduced a few tools. We introduced Perplexity, we introduced Claude, and how traders can start to use these tools as a way to improve their own performance. What we wanted to do today is kind of really stretch that a little bit. So it's trying to understand what AI is, how it is currently being used, and then how you can currently go away and use it, which is why we wanted to get you in. And I suppose to start, it's worth just knowing that I really see AI as kind of three different sections. You've got the compute layer, which is the NVIDIAs of this world, the chips, the Broadcoms, the silicon. Then you move into the LLMs, the large language models. They are the mathematical prediction models that are actually writing your text. And then there's the app layer. So there's the application layer of software that's being written using the LLMs in order to go and give output. But what we want to do here is we want to try and inspire you with a bit of creative. Specifically, you gave me this idea, JJ, when we started talking about using AI as a trading coach. So to start the conversation, if you were looking for the perfect AI assistant as a trader, what would it look like?
It's a really good question. It's a really good question. I think you've got to free your mind a little bit here and step outside of your comfort zone and force yourself to think about all of the areas when you start to think about your approach to trading the markets, you might need support with, right? So before I start the day, what areas do I need to focus on? How do I set myself up for success? Is that psychology? If it's psychology, then we can put that in a box and say, right, I'm going to need AI to help and support me in that particular area. Is it risk? Probably is risk as well. There's an element there of that. Then again, we can put that in a box and help get AI to help us focus in on risk. Is it with research and retrieving information? If it is, again, we should be challenging AI, LLMs to help and support us there. This is all stuff that typically you might go to Google for previously, right? You can now move into the world of LLMs to help and support and synthesize this information, to challenge you, to have a sparring partner in the space, which is quite tricky. I saw a good quote, which was, Google is democratizing knowledge, AI is democratizing capability. And I think this is what this is all about, right?
I like that.
How do you enable yourself? How do you make yourself more capable?
I've got a question for you, JJ, or Mr. AI.
King of AI.
King of AI, apologies, if you will. When you do these sort of like elaborate searches or prompts, for example, you mentioned psychology, risk, and other aspects. Do you see most success or sort of the effectiveness of the output when you separate them? So you do one prompt for psychology, one for risk, one for news, or do you think that you can get all in one? So can you write a prompt that includes all of them, or is there more effective and better success when you separate them?
It's a really good question. I would say for your own clarity and transparency, breaking them down is easier in terms of getting to the output you're looking for. Right? So if you're focusing in on psychology, that might not be a one-shot prompt where you just, or a zero-shot where you say, this is what I need, go. Right? Instead, you should have a conversation with the LLM as to what you're looking for, provide it with the relevant context, force it into a position where it's asking you questions back as to what you're looking for, and build up a structured prompt and then output which would best serve your needs. If you try and do that all together, it can muddy the waters a little bit and not get you to where you want.
That was my guess. But
I think it comes down to for me. It comes down to the capability point is really interesting because it comes down to the on-ramp to that capability is now a hell of a lot less intimidating because you can talk to these LLMs in language. We had some clients in the studio. I was giving a tour yesterday, and people hadn't heard of Perplexity. So one, they didn't listen to the previous episode, which I was pretty upset about. But the question came up about. The example that came up was one from a few weeks ago. Trump was discussing lifting Iranian sanctions. This was before the kind of bomb attacks, and oil was off 3%. We were trying to figure out why. And without having an oil analyst, without having someone that intrinsically knows that market that you can call on, or if CNBC hasn't run an article yet, you don't know necessarily how to get that information. Perplexity, you could ask, what was Iran's maximum capacity to produce oil? And what have they done over the past 5 or 6 years? And Perplexity gave you a graph, very, very simplistic, with showing all of the different levels of oil. And that to me was kind of the light bulb moment in the sense that you don't need kind of an analyst necessarily because these tools are going to do it for you. And it's about trying to guide intelligent people, our clients, risk takers, our clients, that actually just asking questions is fine. A friend of mine asked me a question just this morning. I was planning a holiday for a couple of friends a few weeks back, and I used ChatGPT to create like a graphical itinerary. Yeah. And he said to me this morning saying, what prompt did you use to do that? And I was almost taken aback by it because I can't remember what prompt I used. I just typed in, please make me an itinerary that looks like what I wanted it to look like, and kind of eventually questioned it, and got to something that I liked. The question around prompting is interesting because there isn't one perfect prompt. It doesn't exist. It's about layering things in.
It's very rare that you get it right on the first attempt. It's like you say, Jay, you have to go back and forth a bit and have a conversation and work with the LLM to get what you actually want eventually.
It requires a behavior change. So we're so used to putting something into Google search and getting out links that we then have to trawl through. We're now in a space where we can treat LLM as a conversational sparring partner. We can go back and forth. Ethan Mollick, who's awesome in the space of AI, says you should anthropomorphize AI as much as you can to really understand what it's capable of, right?
I'm going to have to Google.
Yeah, can you
Google define?
Can you let us know what that means?
Anthropomorph.
Yeah, so it's not a robot. We're almost assigning it human-like features, right? So we're talking to this like this is just a mate. Simple as that. Tell me a little bit more about what's going on with Tesla at the moment, right? What sorts of sentiments around Tesla? How should I be thinking about this if I'm thinking about this as a long-term three-year play versus a 2-month play? You could never put that into Google, right?
No.
Because you'd have to have an article that was specific to your key terms. Whereas with an LLM, it can synthesize information from various places, stock twits for investor sentiment, tip ranks on our platform, for example, for analyst consensus, and loads of other places.
Yeah.
So.
Yeah, I mean, it was Musk said in January of this year, we've now exhausted the sum of human knowledge into the training of these models. So if you imagine Google is a tool that's going to go and look across the internet for a particular article, the knowledge that is in that article is already implicit within the training levels of these LLMs. So you don't necessarily need to go and Google search. I mean, it's interesting, the whole investment case around Google now is whether they can implement their version of an LLM, Gemini, into their search and how they can make that much more easy. Because if we're talking about this as an on-ramp, off-ramp type of scenario, people use Google all the time. Google is synonymous with search. So if you're distributing your LLM to people that already use a search function, will they be the eventual winners? So let's turn this into something a bit more creative then, right? So I'm a client. My biggest concern is I may be losing money at the moment. I may be losing money at the moment. I may not know where to set my stop losses. I may know that I can go on tilt because of my psychology. I've just lost 3 trades in a row. Now I'm trying to get it back and I'm revenge trading. And it's all these different things that, the reasons why retail clients lose money in inverted commas, you can point to, and we've run episodes on this before. if you were creating a digital trading mentor now, it knows your personality, it knows your risk tolerance, it knows your trading history, what would you program it to do on a daily basis?
What I would do, just in terms of organization and structure it, something you can do on I think most LLMs is that you can create a project. So that's where I'll begin. So I have all that sort of knowledge that it will accumulate across all my searches and conversations into one project, so it's separate. Just to have that structure is to first off create a project. And then one little cheat code that I've been doing lately is I've been using one LLM to give me a prompt to use for the other LLM. So I go into ChatGPT and I say, hi, I'm gonna create a project in Claude, and I want you to write me a prompt to achieve the following. So and then I wanted to analyze my trading history, I wanted to analyze my performance, I wanted to focus on my psychology, what I'm doing wrong, where I go wrong, how I can improve. I want you to find hidden nuances and insights that I wouldn't normally get by just looking at my ledger history. And I tell them, that's what I want to achieve. Write me a prompt that will achieve that. And then it will write me a brilliant prompt that I'll then take into the other one, and I'll save that as project instructions. So I'll have that every time going forward. So you have a strong base to work from. From there, JJ will let us know what you do after that. Once you've created your project, how would one sort of proceed in your opinion?
Yeah, I guess, and there's so many different projects you can create, right? Again, I'll come back to Ethan Mollick, who says these LLMs are like infinitely patient new co-workers who forget everything every time you interact with them, right?
Perfect.
But the key part is they are infinitely patient, always available, right? So unlike an intern who's only available during working hours, whatever those working hours might be, and has mood swings, you might get different variability in what they give back to you. With this, you can ask a question at any time, 3 a.m. in the morning if you've got an idea, ask that question. Ask 20 questions, ask 100 questions, you're gonna get back consistent output from this. So you could create an intern, you could create specialist roles. I quite like the idea of that, and I was showing you something before this, where you've got, Growth Gary, for example, who always looks at things from a positive perspective. You've got Risk Rachel, who takes care of all of your risk considerations. You've got Contrarian Charlie, who's always willing to go against the consensus and give you that viewpoint. And then you've got somebody looking after psychology. Get them all into a room, an LLM room, and get them to debate your thoughts. Today I'm thinking about a setup on cable. This is why, and just see what they say. And it's not that they're going to have the right answer for you. I think that's really important here. We're not looking to LLM for the right answer, I don't think, anyway. You're looking to challenge and move your thinking and help you think through things, blind spots that you might not otherwise have considered.
Yeah. It's exactly that what you would expect a trading coach to give you.
Exactly.
Right? The reason why there's this perception in kind of the retail trading world that the big boys or the suits, have got a trading edge on you, it's probably because they've been given a Risk Rachel or a Growth Gary. Right?
Contrarian Charlie.
Contrarian Charlie, right? They've been given kind of levels of research and structure that the freedom you have as a retail client, you don't have. Like it's one of the perfect things that you can do as a retail trader is you've got the flexibility. The problem that gives you is you don't necessarily have someone holding you accountable. You don't necessarily have someone challenging your thought. You don't necessarily have someone saying, oh, by the way, when you came home after dinner, after having a few glasses of wine, it's probably not the best time to start trading the Dow, for example. Yeah. And the idea is that using your data, using your history, you can download it, you can put it into that project that you've just described, and you can then start to get it to have this conversation.
Yeah. Keep coming back to that phrase, democratizing capability, right? We're putting this in the hands of retail investors, or that's what's happening. I'm not talking about for those who are keen just to have a punt on, on the price of cable around whatever. I'm talking about those who are taking this seriously. They're keen to take on the markets or trade the markets. They've got the time to do it and the patience to do it. and they want to challenge themselves to be better.
We had I had an example a few weeks back. I told you about this chap that I met at an event that we ran, and he had a very UK-focused portfolio of equities. But his problem was he wasn't exactly correlated to either the FTSE 100 or the FTSE 250. So when he was trying to find a way to hedge away some of that risk over an event, over the weekend, whatever it might be, it was tricky for him to try, and it was trial and error. Right, okay, I'm going to short one FTSE, I'm going to short 10 FTSE, I'm going to short 52 FTSE 250. I might do that and a little bit of cable, or I might buy gold. I don't know how to kind of diversify and put that risk on. So we fed the portfolio into an LLM, and we said, what am I correlated to? What is my portfolio just now correlated to? And it came out that it was 0.73 correlated to the FTSE 250. So if he was going to place a trade, if the size of your portfolio was 10 grand, you needed to do 0.73 of a contract on the FTSE 250 to hedge that out. And that was you're getting much closer to an element where you can be accurate to preserve your capital and to then hopefully then dial that up if you needed to, because you could then add, I don't want to be that correlated to the 250. I might try and add some tech exposure in, or I might try and add some oil exposure so I'm less exposed. And it's having that, that's your risk Rachel that you can get to have a conversation. I'd love it. I wonder what kind of conversations they'd have with my trading data. Like, just never do that. Just never do that.
I haven't collected an entourage like JJ has, but I have for some of my clients. What I've done is I've created a project for the LLMs to analyze them, and one thing that I asked it is look at analyze all the losers and all the losing trades and tell me what they all have in common and how they can be prevented. And so it looked at, took a year's worth of trading, banged in the order history and the ledger history. And something that was quite interesting that it came up with is that all the, so this client in particular was trading a lot of tech stocks, and in Amazon in particular, he always traded in the evening, so 7 to 9 pretty much. And he was losing about 70% of the time on Amazon. But when he was trading, for example, Nvidia earlier during the day, he was always his win ratio was about 85%. So when I speak to him, he says, oh, well, yeah, I mean, Amazon's a bit tricky. I always do it like after dinner when I'm tired. But yeah, you know what? You're right. Let me just trade it during the day instead when I'm a bit more alert.
Or just stop doing that.
Or just stop,
take that out of the picture.
Exactly, yeah.
And look at the difference in account.
And he'd never thought about this. It's just something he'd done unconsciously. So it can give you that insight that you don't really think about yourself. It's almost like a mirror to yourself if you ask it correctly.
Yeah, I think the other thing as well is it doesn't necessarily just have to be trading data. Perplexity, and I've banged on it a few times, both on the show and on the pod. They've got a version of projects, they call it Spaces, where there's pre-programmed prompts in kind of little mini apps now. And Perplexity are going after finance. They've come out and said, look, if we can control the finance vertical, ultimately you get data being pulled in, calculation and output being put out in a way that's easy to understand. They've gone into that space. So perplexity.ai/finance, you're now going to get a free to access a lot of the data you can download, so it's helping programmers. You can ask questions. You're going to get the bullish case, the bearish case, and we've spoken about how it can give you. They made an acquisition of Quarter, the earnings transcript guys. If you can see what Musk is saying in the earnings call for free, and it gets summarized for you in real time, you're getting way more information than you would have previously been able to.
Yeah.
Unless you're downloading things off the SEC website, unless you've got access to the stream, unless you've got access to the call, which retail clients do not have.
Who does that?
You just don't typically get access to it. And so, the spaces that they have over there, you might also want to search across all filings and all conversations.
Yeah.
So they've got a space now where it's about the S&P 500 earnings calls across each different reporting season to say, right, how many times did people talk about AI? What was the main theme that people were talking about when it came to AI? Are we still discussing cost and efficiency, or are we now exploring avenues for growth, new revenue lines, new product lines? And where does it take you? Because you'll get insights that you weren't able to get previously. Because previously, as we go back to your earlier Google example, you needed to know CNBC or Bloomberg or the BBC or have written an article that give you this information. Now you're the journalist.
Yeah.
If there's something that you're specifically worried about in terms of your portfolio, ask the question.
Yeah, no, I agree with you there. And also, just on that point, assign it that role, as in, analyst, for example. We're talking about earnings calls. Assign it a role, and then ask it, how should we be thinking about what they're saying at the moment? Not only what are they saying, but what are they not saying? And again, I think that's something that you won't get with Google search. Right? You'll start to get additional implied insight that you otherwise wouldn't get.
Yeah, completely.
Yeah.
I think the other thing you could use it for as well is a stock screener. If you've got a portfolio, you can put your portfolio into a Perplexity or into a Claude or into a ChatGPT and ask it, this is the basket of shares that I've currently got investments in. Screen for better versions of it. And you might say, I want shares that are in the same sector that are higher earnings per share, a lower multiple, higher dividend coverage, whatever you might ask for, whatever your preferred outcome is. And it may suggest other stocks. I was having a conversation with Jess, and she's coming to IG on our marketing team, and is coming at it from, where do people generate their ideas and what's going on? And I said, here's Perplexity, right? What did you read about in the newspaper this morning? Oh, I saw someone talking about the UK's just signed off on a new nuclear power plant. Interesting. That's something you've read. That is interesting. How would you express that as a view in an investment? She's like, I don't know, I have no idea. I said, okay, so I can put it into Perplexity. I've heard that this is happening. How could I get exposure to it? And it suggested, okay, you could look at the infrastructure companies, you could maybe look at the building materials companies, or you could look on the other side and you could look at uranium as a commodity and the infrastructure that comes along with that, which is, continue the conversation now. Okay, I'm interested in uranium. How would I get exposure specifically in my ISA? Yeah. And then it gives you a list of stocks. And so you're doing this stock screening, whereas previously you'd have to go and find an article or ask someone who knows.
Yeah.
And it's this democratization of this information that you just haven't had access to before.
Yeah, and also one thing that I think is important to note is that depending on if you're investing or if you're trading, your input should vary drastically. Like, for example, for an investment, that's a great prompt and input. But if I'm looking to do a short-term trade, find the stock, you find what you're willing to do, or looking to do, but then you can also use it to sort of, here's the chart, 15-minute, 10-minute, over this long period. Please analyze and give me recommendations for my entry, exits, my stops and limits. So using that as well to sort of have that as a routine, that every time, because we talk about this all the time with our clients, they don't have the stops, they don't have the limits put in place. So use it, let risk ratio set your stops and limit as well. If you're not doing it yourself, let the AI do it and analyze the chart for you and then give you the entries with the risks.
It's something that Axel always talks about.
I was about to say, it doesn't have to be risk ratio. If you know of an analyst who's particularly good, Axel, for example, one of our senior analysts here, you can capture some of the stuff he said over the past couple of years, upload that to a project. Not too sure how he'd feel about this. But then just have a conversation with Axel.
With Robo Axel.
Yeah, Robo Axel, exactly. How are we thinking about this? How are you thinking about my stop levels and limit levels?
He's going to go on some kind of Hollywood writer.
Yeah.
Going to do him out of a job. But the point being, he's a very big proponent of, from a trading perspective, you risk 1% to 2% of your account. You look at where your stop goes first, and then you let that drive your position sizing. And then if you're risking one risk unit, let's say it's 50